Ladies and gentlemen, welcome to Only Trade to Win. I do not have any stock tips for you, and I do not have a crystal ball, therefore I do not know where the market is going tomorrow or the next month. But what I do have is a trading methodology and a process that took me 25 years to put together. My intention is to show and share with you what I know, hopefully that will help you to make your own financial decisions and help you on your way to your own financial independence. Today is Saturday, December 9th, 4:27 a.m. New York time. This is the daily picture of the Dow. Really quickly from top to bottom, the purple line that you see at the top is the all-time high for the Dow Jones Industrial Average. The green dotted line is the previous 52-week high. In case of the Dow, it was set on July 31st. And the blue line at the bottom is the opening price at the beginning of 2023. I'm trying to color code all of my charts, and I suggest you do the same. So when you are flipping between different ticker symbols, you'll be able to see what's going on, not just on the daily, hourly, but also on the longer time frames. If you watch my previous videos, you know that we said that this red dotted line represents a spot where many traders put their stops. So we made a new low of the move just a little bit below 32,500. It was at the end of October. We came into November and we took off like a rocket, having only one pullback right here, and that is the area of the previous high. Just so you know, that was the move of 5% up until we got some kind of pullback for one day. After that, the Dow kept going until we made it to where we are right now with no significant pullbacks. We're sitting right under its all-time highs and the index is consolidating sideways. What it tells us after a move like this, if you cannot even pull back and consolidating horizontally, the index is extremely strong. This bear trap that we had at the end of October was so significant and so violent that all the shorts that have not covered on this amazing run up, they are really scared right now looking at that purple line, because they know that once we cross and trade a little bit higher, there will be no mercy. Not that they had any mercy before. So let's zoom out and look at the longer term picture. This is our weekly chart from which we can tell that the all-time high for the Dow Jones Industrial was set back in November of 2021. As I mentioned before, it's 2 years of waiting for money managers and portfolio managers for the Dow to reach its all-time high so they can get some kind of decent bonuses. And I understand that what is decent on Wall Street may not be considered decent anywhere else, but in any case, this was a long wait for them, and all the money managers and portfolio managers are eyeballing the purple line, thinking that wouldn't be nice to close up there and get a really nice green fat Christmas bonus. And it looks like they may get one, because we're closing right below the all-time highs and we are not pulling back. If you look at the Dow on the weekly, from November until now, we did not have one pullback, and all the bars are greens. And if we wanted to put it in numbers, the Dow Jones Industrial ran up almost 12% in 1 month without having any pullbacks. That happened after a monster bear trap, and this is a good illustration of a short squeeze. Now, some people may look at this picture and say, hey man, I don't see anything. This doesn't look to me like it's going up. It looks like it's going sideways. Yeah, maybe back in 2020 it was going up, but right now it's just consolidating. And I'd say, let's zoom out even more and look at the really big forest. And this is our monthly picture. Boom. Do you have any more questions? Can you clearly see that the mega trend is up? Can you see that the Dow Jones Industrial has been going up since 2009? Yes, we had issues on the way, yet we are back at all-time highs. And if you wanted to be on the right side of this trade, you had to stay long. Now, our next stop is the Russell. And here we have a completely different picture. When for the Dow Jones Industrial, it is only a few points away from its all-time high, the Russell has ways to go to reach its 52-week highs. If you look at the blue line where it started the year, about a week ago, we were still in the negative territory. Russell is the sick man. We're waiting for the Russell to join the party so they can all go up together. The Nasdaq, the Dow, the S&P 500, and now the Russell has joined the other indexes in the positive territory. And if we look in this area here, when it bounced off the lows of November, the first pullback was quite a significant pullback. Once we traded above that level in here, we did not get a pullback. We consolidated horizontally and moved up. Again, here, we are consolidating horizontally. So again, first move, pullback, because everybody knew that it was weak, so people sold into it. Once it showed its strength, there are not really many sellers here, and professional traders know that a legger can become a leader and vice versa. In this case, it's difficult for us to imagine that Russell can become a leader. However, anything is possible in the markets. And if we take a look at our watch list, we can tell that Russell was the leader for the month of November. Column number 5, last row, 12.35%. It's the return of the Russell for the month of November. And we say that for the month of November, our legger became our leader. So if we go back to our pictures, we'd say it is looking at this level first, around 1940. And the second level would be the 2034 level, which is not even its 52-week highs. The 52-week highs for the Russell is way back in February at 2060. So compare the picture on the Dow. It is above its previous 52-week high and is sitting a few points under its all-time high. And the Russell has almost 10% to go to its 52-week highs and about 32% to its all-time highs. And if we take a look at our megatrend, this is monthly picture of Russell, and compare it to the Dow, we can clearly see that in this case, this forest is definitely growing tall and going up, where this forest is either not getting enough water or sun, or maybe the both, and has quite ways to go to reach its all-time high that it set 2 years ago. And the lesson for today is that if you see things are turning around after a sell-off and they're heading up, you want to buy the strongest one. And how do you know which one is the strongest? Well, that's why you keep your watch list. In column number 6, at the beginning of the month, we identified that Nasdaq was the strongest one, and we pointed out that Dow was only 4% away from its all-time high, column number 7. So before looking at any pictures, I already knew that I want to look at the Dow, and because the 52-week high at that time was really close, and the all-time high was within the reach, and nobody got paid for managing money for 2 years because we were failing to make new highs. I knew that they want to get paid and they would be looking at that number, and I just got lucky by guessing that it would go in the right direction. Where in reality my working assumption worked out. There was no luck. I just had a thought process and experience that pointed all these things to me. And those things were, again, when everything sold off and made lows for the year or lows for October, some indexes were not coming in. And the Dow was the strongest one, was sitting the closest to its all-time high. And I made notice of it. When we came to this spot right here, I pointed out that we have a lot of stops sitting above this level. And look at this. This is the only place where we had a pullback because that's where the bears knew that they can push it down. But it didn't last long. And we took off. We went through all previous levels. Now we're sitting under the all-time high. Just to be very clear, we're approaching the end of the year. If there is a pullback, people will be looking to buy that pullback. I hope this helps. Navigate with care, and I will see you next time. Have a great weekend, everybody.